In today's video, we'll see the support and resistance. While discussing candlestick pattern, we have learned about the entry and the stop loss point. However, the target price was not discussed. We'll discuss this in this chapter. The best way to identify the target price is to identify the support and the resistance point. The support and the resistance SNR are specific price point on a chart expected to attract the maximum amount of either buying or selling. The support price is a price at which one can expect more buyers than sellers. Likewise, the resistance point is a price at which one can expect more sellers than buyers. On a standalone basis, traders can use support and resistance to identify trade entry point as well. So now coming to the first topic of the video, the resistance. As the name suggests, resistance is something which stops the price from rising further. The resistance level is a price point on the chart where traders expect maximum supply in terms of selling for the stock or the index. The resistance level is always above the current market price. The likelihood of the price rising to the resistance level basically consolidating, absorbing all the supply and declining is high. The resistance is one of the critical technical analysis tool which market participants look at in a rising market. The resistance often act as a trigger to sell. So you can see here the chart of Ambuja Cement Limited. The horizontal line basically it's coinciding at rupees 215 on the chart. It marks the resistance level for Ambuja Cement. I have deliberately expressed the chart to include more data points, the reason for which I will shortly explain. But before that, there are two things that you need to pay attention while looking at this chart. The resistance level indicated by a horizontal line is higher than the current market price. While the resistance level is at rupees 215, the current candle is at rupees 206.75. The current candle and its corresponding price are encircled for your reference. For a moment, let us imagine Ambuja Cement at rupees 206 forming a bullish Marabuzo with a low of rupees 202. We know this is a signal to identify a long trade, and we also know that the stop loss for this trade is at rupees 202. With the new found knowledge on resistance, we know that we can set 215 as a possible target for this trade. Why 215, you may wonder. The reason are simple. The resistance of rupees 215 implies there is a likelihood of excess supply. Excess supply builds selling pressure. Selling pressure tends to drag the price lower. Hence, for this reason stated above, when a trader is long, he can look at resistance point to set target and to set exit point for the trade. Also, with the identification of the resistance, the low trade can now be completely designed as entry could be at 206, stop loss at 202, target at 215. The next obvious question is how we identify the resistance level. Identifying price point as either a support or a resistance is extremely simple. The identification process is same for both support and resistance. If the current market price is below the identified price, it is called a resistance point, else it's called a support point. Since the process is the same, let us proceed to understand support and we will follow it up with the procedure to identify SNE. Now, coming to the second topic, that is the support. Having learned about resistance, understanding the support level should be quite simple and intuitive. As the name suggests, support is something that prevents the price from falling further. The support level is a price point on the chart where the trader expects maximum demand in terms of buying coming into the stock or the index. Whenever the price falls to the support line, it is likely to bounce back. The support level is always below the current market price. There is a maximum likelihood that the price would fall until the support. Consider it, absorb all the demand and start moving upward. The support is one of the critical technical level market participant looking for in a falling market. The support often act as a trigger to buy. So here is a chart of Cipla Limited, and the horizontal line coincide at rupees 400 and tends to drag the price higher. Hence, for the reasons stated above, when a trader is short, he can look at support point to set target and to set exit points for the trade. Also, with the identification of the support, the short trade is now completely designed. Entry 442, stop loss 446, target 435. Now coming to the third topic of the video, construction drawing of support and resistance level. So here 4 steps guide to help you understand how to identify and construct the support and the resistance line. Load data point. If the objective or is to identify short term support and resistance, load at least 3 to 6 months of data point. If you want to identify long term support and resistance, load at least 12 to 18 months of the data points. When you load many data points, the chart looks compressed. This also explains why the above two charts look squeezed. Long term SNA is useful for swing trading. Short term SNA is useful intraday and BTST trades. So here is a chart where I loaded 12 months of data points. Step 2 is to identify at least 3 price action zone. A price action zone can be described as sticky point on chart where the price has displayed at least one of the behaviors. Hesitated to move up further after a brief up move, hesitated to move down further after a brief down move, sharp reversals at a particular price point. Here are series of charts that identify the above 3 points in the same order. So in this chart, the encircled points indicate the price hesitation to move up further after a brief up move. Here is another chart. The encircled points indicates the price hesitation to move down further after a brief down move. This is a chart which encircles the sharp price reversals. Now third step is to align the price action zone. When you look at a 12-month chart, it is common to spot many price action zone. But the trick is to identify at least 3 price action zones at the same price level. For example, you can see in this chart where 2 price action zones are identified, but they are not at the same price point. You can look at this chart. I have encircled three price action that are around the same price level. A critical point to note while identifying these price action is to make sure these price zones are well spaced in time, meaning if first price action zone is identified on second week on May, then it will be meaningful to identify the second price action at any point after fourth week of May, well spaced in time. The more distance between the two price zones, the more powerful is the support and the resistance identification. Step 4 is fit a horizontal line. Connect the three price action zone with a horizontal line. Based on this, line fits in concerning the current market price. It either becomes support or resistance. You can have a look at this chart. Starting from left, the first circle highlights the price action where there is a sharp reversal of price. The second circle highlights the price action where the price is sticky. The third circle highlights the price action where there is a sharp reversal of price. The fourth circle highlights a price action where the price is sticky. The fifth highlights the current market price of Cipla 442.5. This chart, all the four price action zones are around the same price point, that is rupees 429. Clearly, the horizontal line is below the current market price of 442.5, making 429 an immediate support price for Cipla. Please note that whenever you run a visual exercise in technical analysis, such as identifying support and resistance, you run the approximation risk. Hence, always give room for error. The price level is usually depicted in a range and not at a single price point. It is actually a zone or any area that acts as support or resistance. Going by the above logic, I would be happy to consider a price range between 426 to 432 as a support region for Cipla. There is no specific rule for this range. I just subtracted and added 3 points to 429 to get my range by for support. Here is another chart where both support and resistance have been identified for Ambuja Cement Limited. The current price of Ambuja is 204.1. The support is identified at rupees 201. So this below is the current market price and the resistance is at rupees 214 above current market price. So if one were to short Ambuja at rupees 204, the target based on support can be at rupees 201. Probably this would be a good intraday trade for a trader going long at rupees 204. 214 can be a reasonable target based on resistance. Notice in both the support and resistance level there are at least 3 price action identified at price level, all of which are well spaced in time. Now coming to the fourth topic, that is reliability of support and resistance. The support and resistance line are only indicative of a possible reversal of price. They are basically they have no means should be taken for as certain. Like anything else in technical analysis, one should weight the possibility of an event occurring based on pattern in terms of probability. For example, based on the chart of Ambuja cement, current market price is 204, resistance is 214. The expectation here is that if Ambuja cement starts to move up at all, it is likely to face resistance at rupees 214, meaning at 214 sellers could emerge who can potentially drag the price lower. What is the guarantee that the seller would come at uh, 214? In other words, what is the dependency of the resistance line? Horizontally, your guess is as good as mine. However, horizontally, it can be seen that whenever Ambuja reaches 214, it reaches in a peculiar way, loading to formation of a price action zone. The comforting factor here is that price action zone is well spaced in time. This means 214 stands as a time test price action zone. Therefore, keeping the very first action of technical analysis in perspective, history tends to repeat itself. We go with the brief that support and resistance level will be reasonably honored. Purely from my personal trading experience, well constructed support and resistance point are usually well respected. Now, coming to the final point of the support and the resistance, optimization and checklist. Perhaps we are now at the most important junction of this module. We will start discussing a few optimization technique which will help us identify high quality trades. Remember, when you see quality, quantity is always compromised, but this is a compromise that is worth making. The idea is to identify quality trading signals as optimized to identify plenty but worthless trades. Optimization in general is a technique wherein you fine tune a process for best possible results. The process in this context is about identifying trades. Let us go back to candlestick pattern. Maybe the very first we learned bullish Marabuzo. A bullish Marabuzo um, suggests a long trade near the close of the Marabuzo, with the low of the Marabuzo acting as the stop loss. Assume the following credentials for the bullish Marabuzo: open 432, high 449, low 430, close 448. Hence, the entry for the long trade is approximate at 448 with 430 as the stop loss. Now, what if the low of the Marabuzo also coincide with a good time tested support? Do you see a reasonable confluence of two technical theories here? We have a double confirmation to go long. Think about it on the following terms. A recognized candlestick pattern suggests the trader initiate a long trade. Support near the stop loss price suggests the trader the presence of significant buying interest around the low. While dealing with a fairly random environment such as the market, what a trade really needs is a well crafted trade setup. The occurrence of the two condition Marabuzo plus support near the low suggests the same action, that is to initiate a long trade in this case. This leads us to important idea. What if we have a checklist? Call it a framework if you like, for every trade we consider. The checklist would act as a guiding principle before initiating the trade. The trade should comply with conditions specified in the checklist. If it does, we take the trade, else we drop it and look for another trade opportunity that complies with the checklist. Discipline that discipline that they say makes up for 80% of the trader success. In many opinion, the checklist force would be disciplined. It helps you avoid taking an abrupt and reckless trading decision. In fact, to begin with, we have the first two critical factors of the checklist. The first is the stock should form a recognizable candlestick pattern. Note, we have learned some of the popular patterns in this module. To begin with, you can use just these patterns to comply with the checklist. Second, support and resistance should conform to the trade. The stop loss price should be around support and resistance. For a long trade, the low of the pattern should be around the support. For a short trade, the high of the pattern should be around the resistance, sorry. For now, in this module, as and when we learn new technical analysis concepts, we will build this checklist. But to quest your curiosity, the final checklist will have 6 checklist points. In fact, when we have grand 6 checklist point, we will weigh down each one of them. For example, checklist point number 4 may not be an important as point number 1, but it is more important than 100 other factors that distinct the trade. So the key takeaway from this chapter are: support and resistance are price point on the chart. Support is a price point below the current market price that indicate buying interest. Resistance is a price point above the current market price that indicates selling interest. To identify support and resistance, place a horizontal line in such a way that it connects at least 3 price action zones well spaced in time. The more number of price action zone the horizontal line connect, the stronger is support and resistance. Support and resistance can be used to identify target for the trade. For a long trade, look for the immediate resistance level as the target. For a short trade, look for immediate support level as the target. Lastly, comply with the checklist for optimal trading results. So that's it for today's video on the support and resistance. I hope you gained a lot of knowledge. If you did, please hit like to this video, share it with your friends, and subscribe to the channel. Thanks for watching. Bye bye.